Also, let's bring on board the management of ICICI Lombard. We have Mr. Gopal Balachandran, CFO and CRO at ICICI Lombard General Insurance, joining in with us right now. Sir, good afternoon. And what I want to talk about is the wholesale tilt in is something which is a little concerning when we're looking at it for some of your investors. What's your take on that, and how do you see this business in terms of growth and risk? And do you think higher wholesale tilt may impact the claims ratio?
So if you refer to the commercial lines, I think, as I said, at this point of time, from a commercial line standpoint, what we are seeing in the market is a couple of things. One, the pricing regime is kind of largely flattish, or maybe to some extent there is actually a reduction in price that the market is experiencing, and that's the reason when at these times we tend to take a slightly more guarded stance in terms of our ability to kind of grow that book. And that's why I talked about from an ICICI Lombard standpoint for Q1, the commercial lines have been largely in line with the industry growth, though in some of the segments of commercial lines, we have been able to get to a market leadership position as well. But having said that, I think the key thing to watch out for commercial lines as a category is some of these catastrophic events led losses. For example, there could be flood losses that could happen across the country, etc., etc. But that's the nature of the business that we are in. I think the key thing to watch out for is how many cat events is the industry experiencing. And in general, even within that, if you see from an ICICI Lombard standpoint, relative to our market share, in each of these catastrophic events, our share of losses have been lower than the natural market share that we have had as a company. And hence, to that extent, we believe we have been kind of reasonably risk selecting the portfolios quite well.
All right, Mr. Balchandran, this is Snehi also joining in. Let's talk about your loss ratio, specifically in the motor segment now. You've indicated a lower competitive intensity, and that has led to an overall fall in the loss ratio. So do you anticipate competitive intensity to stay low for the foreseeable time frame? Because some of the new age players seem to be going aggressive using technology and also showing healthy growth on this metric. So what's your outlook when it comes to your company's particular metric?
So again, that's a great question if you were to ask me. But again, when you put this in the context of the outcome that the industry is exhibiting on motor as a category, which is the second largest in terms of revenues, the combined ratio for the industry, even if you look at the FY24 numbers, because industry's numbers typically comes at a quarter's lag, it is still elevated at 118%. 118% running the book for the industry combined ratios is very high. And that's the reason why, in fact, if you see across many of the players who were very aggressive in the earlier time cycle in the last couple of years, most of them have started to kind of look at moderating their growth numbers, particularly in the context of motor as a category. And hence, the ability of these players to continue to lose money on combined at those levels, we believe could be a bit challenging from a market standpoint. And that's the reason why over the last, I would say, 3 quarters, ICICI Lombard has actually been able to kind of outgrow the market, specifically in the context of motor as a segment. Going ahead, I think that's something again which we will continue to kind of look for, as in to say that we would watch for how the growth numbers are playing out in terms of new vehicle sales, and the ability of us to continue to risk select and pick up the right risk segments is something that ICICI Lombard will be kind of very, very closely watching for.
Right, you know what? Also, investors are expecting, everyone is watching out for the budget tomorrow. So, some of them are speculating in terms of some positive announcements that could come in, tax relief in the form of increasing limit for health insurance segment. What is your take and expectations from tomorrow's budget?
Actually, the way I would kind of put forth is I think we are just possibly slightly, maybe less than 24 hours away in terms of the announcement. And honestly, one would obviously wait for the actual announcements to play out. But honestly, I think, as I said, two factors. I think in general, I think the regulatory environment and the thought process from a government standpoint is also to kind of make insurance as a destination wherein it can attract a lot more stakeholders to come and participate in, given the levels of penetration that this sector exhibits. And hence, any such announcements which will further fuel the increased opportunity for attraction of capital into the sector, it will be a great welcome. And equally, if there are announcements that will help in improving penetration of the overall market, those are some things that we'll be very, very closely watching for. But as I said, honestly, we'll wait for the actual announcements to be done maybe 24 hours from now.
All right, all eyes are going to be on that union budget. But Mr. Balchandran, coming to your portfolio now specifically, let's talk about the health segment. Your growth has been roughly 21% this quarter. Now, we believe you have had new products like Elevate, where you've showcased extensive use of artificial intelligence for insurance products. So, what's your take over there as well? Can we expect more such innovative products to drive your growth? What are your plans on new product launches, if any?
So I think that's again a great question if you ask us, because retail health again has been a segment of preferred focus for ICICI Lombard. And that's the reason we have been continuously looking for as to how we can create an experience for the customer, which is very, very positive. And that's the reason maybe towards late June, early July, we did come out with this new health insurance solutions, which is called Elevate, keeping in mind exactly what you rightly mentioned, in order to create a personal experience for an individual consumer. Because as you know, because health insurance impacts at an individual level, every customer, he or she may have a preference which is significantly varied. And that is exactly what this particular health insurance solution does. It creates a personalized solution for an individual consumer depending on what coverages that he or she intends to take, and correspondingly what he or she expects as an outcome insofar as the claim experience is concerned. And that is significantly powered by AI, because at the back end, we have created various personas which will be able to kind of identify an individual requirement and possibly give a solution which will kind of largely mirror the expectation of that individual consumer, rather than trying to create something which kind of works for people at large.
Okay, that was, thank you so much, Mr. Balchandran, for joining in with us on ET Now.